Hey, this is Neil Bawa, the mad scientist in multifamily, and you're listening to the Mailbox Money Show with Bronson Hill.
All right, welcome to the Mailbox Money Show. I'm your host, Bronson Hill. I am very excited to be here. We have a very special episode today. Amazing guest, Brandon Cobb, who does land development. Now, land development is something I've been interested in for quite a while because you take raw land and you're able to entitle or either to build yourself or to sell it off in smaller pieces. And he has done this very successfully for a long period of time. And he also has a mastermind that he helps people to do this as well. He is the CEO of HBG Capital, and they specialize in real estate development and investment and done lots of different things within real estate. So really excited to be talking. He's also a biohacker. He's just a great guy. We talk some similar things. We actually both have a background in medical device sales, and so we swapped some war stories there about that, which is fun, but definitely a great training for what we're doing now. So Brandon, really excited to see you, man. Nice to chat with you.
Hey, man, the excitement's all mine. Thanks for having me on.
Oh, for sure. So tell us about, we think we've had a couple over the years, some land acquisition or people, flipping land or things like this. But tell us a little bit about what you do and kind of how you found this and, how is it kind of different than some of the other investments that you've done or that are out there?
Yeah, so we've done quite a few across the real estate board. Anybody that's been in real estate long enough realizes that different cycle, certain sectors within the real estate sector tend to do really, really well, and it's not like a one-size-fits-all pill. We do what's called development, and development is a loaded word. Like, what is that? There's multiple phases to it. A lot of people think of the vertical construction as the key component of development, but there's actually two phases that come before actually building the homes or building the multifamily or building the commercial units. The very first phase is taking a raw piece of land and just getting it approved for whatever it is. Could be a community, could be commercial. Anything in real estate starts with the land, and you first got to get it approved. So we call that land entitlement. And all we're doing there, and you can go into more of the specifics on what land entitlement is exactly, but you just want to get it approved for whatever it is that you're building. And when you do that, you force appreciate the value of the land, right? When you take it from farmland to 100 home community, it's worth a lot more money. And so that's one of the value add plays in how we force appreciate the value is through that entitlement process. So that's phase one. Phase two is where we do what's called the horizontal development, right? The word development is really like horizontal construction. Building is when you're going vertical. And so this is when you're putting the roads, the sewer, the infrastructure into place. What we do is we focus on single family residential. So we work with like the Lennars and the D.R. Hortons to invent neighborhoods for first time home buyers. Like, that's our niche. That's what we focus on. So we're creating lots that are ready to build a home. So imagine all the roads and everything are in the neighborhood. There's just no homes, and we sell those individual lots off to the builder that can then go up. So that's the second phase, and there's a second layer of forced appreciation when you do that. So that's what I call the development part, and then you get the construction part, which when you're actually going vertical. So we've done all three. We used to build houses. That's how we got into this. And we went from building 20, 30 houses a year to needing to really grow and scale that. And in order to grow and scale it, you need to focus on larger parcels of land, because a lot of builders will start out with infill. This is going after those lots that are kind of in neighborhoods, or you tear down a home in a neighborhood and you build, one or two homes in its place. That's called infill, where, you're already in existing neighborhoods and you're building in existing neighborhoods. So like the sewer and stuff's already there.
We're doing the manufactured and the offsite built stuff. Yeah, it's infilled after the fire and stuff. But
Yep.
you're doing like, these are full new developments. You're in Tennessee. Are these in Tennessee as well, or are they elsewhere?
Yeah, Tennessee, we've done some stuff in other markets as well, but most of our business is done in Tennessee.
Gotcha. And of those three stages, which one are you most focused on now, or which one are you most excited about?
Yeah, right now, with the way the market is, neighborhoods not selling quite as fast, builders being less aggressive, most of what we're doing right now is land entitlement. That is where we put it under contract. We don't buy it until we actually get all the approvals. That's one of the ways we mitigate risk. But we put it under contract, we take it through the entitlement process, and once it's been forced to appreciate, then we do what's called a double close, where we sell it. So we already have our buyer lined up to buy it during our due diligence phase, So we've got that BC contract in place. We have an AB contract with the seller, and all we're doing is putting the money up to take it through that process when it's pre-sold. That's predominantly what we're doing right now, and then we're doing a little bit of phase 2 development as well.
So you're not doing as much of the final build. You're doing more of the buy the land, kind of entitle it, and then some of the building out the infrastructure and the roads and all that stuff. Is that right?
Yeah, pre-sold contracts, because right now, in our opinion, it's just a little too risky to do spec homes. We had a lot going up until interest rates did what they did in 22. You know, that was a crazy event. And so it's been a tough market for housing, as a lot of people have known. So, for that reason, we're not building as much right now.
And we've had that issue actually here too. We're building after the fires, and so became a dealer for manufactured and modular homes, and we've done a lot of the things. We've raised over $50 million for different projects of different kinds. But one of the issues we've had now is, as we look at our all-in building cost, it's very similar to what some of the older product is actually selling for. And so we've got to wait till the new construction comps come out so they can comp against the new stuff. So with development, it's just it is cyclical. There's a timing to it. You've got to get it right. And you can be first, but you're taking a risk when you go first, right? So it's like, if you know where you want to get to, that can be pretty powerful. So what kind of, like, when someone invests in this kind of thing, you guys raise funds for this? What kind of returns generally should people expect in this kind of thing? Do some people do themselves typically, or how does it work from the financial side?
Yeah, there's a bunch of different ways you can slice it, and depending on what stage of development you are, there's certain risks associated with it, and that'll command a certain IRR. But I'll explain how we structure things, kind of along the way. So that first phase that we do of the development, where we're just doing land entitlement. So we're putting it under contract. We're controlling the land with a contract. We've got an end buyer lined up, and we raise capital for the entitlement costs. So what are those? Those are mostly the civil drawings. So we first, during our due diligence period, want to make sure that it's safe before we actually start raising capital and putting anybody's other money other than ours in it. And we make sure the land is safe via a few things. We might have to get a traffic study just to make sure that the city is going to give us a preliminary plat approval, right? So that's like the goal, is we want to get the preliminary plat approval. Once we have that preliminary plat approval, it's safe to raise funds for that project, because we know the city has said, yes, we want this, contingent on seeing the design for it. So that's a big risk remover. So we pay for the endangered species report, the phase 1 environmental. We want to make sure there's no nuclear dumping site in the past or anything on it. And then the geotech report, right? And no sinkholes or any crazy rock that's going to be expensive. So once we get all that out, then we will go and we will raise capital from investors. And it just depends on how big of a project it is, right? You can get as big as you want. There's some projects are thousands and thousands of units, and they're literally building like a small city. I've seen that. So, returns in that, we do a straight 18% preferred return. That's what we've always done in the past. That's worked out really well. But you can cut up the equity however you want with these things. The other thing we do is we make sure that if we're doing a land entitlement play where we're controlling it with contracts, we don't actually own it, that the deposit that we get from our end buyer, the builder, is enough to cover the capital needed to do the entitlements. So, for example, if last minute the buyer backs out, like it's the day before closing and our builder buyer backs out, and we're going to now renege on our contract, and the seller could potentially walk away, and we have that capital at risk, that builder's deposit at least covers how much capital we've raised. So that's how we mitigate that biggest risk during the entitlement phase. A lot of people ask that question because that is your biggest risk, because you don't own the land. How are you securing the investment? It's via that deposit that the builder has to cover, and that's in the event that they were to walk away last minute.
Yeah, gotcha. Okay. So 18 pref, and then it's usually no cash flow. You just kind of catch that up at the end, right? However, they're along there in the deal, they kind of get paid out, and the pref is so they get paid first, so they get their 18%. And I guess the biggest risk of this is just that somehow the market moves a bit, or the demand isn't there, or something like that. Is that kind of some of the primary risks, or it takes longer than you expect, or things like that?
Yeah, I mean, your biggest risk is your buyer backing out, right? I mean, these are AAA rated, Wall Street funded builders, right? Everyone knows who Lennar is, D.R. Horton, like that's who we're working with. So, and they're putting up very large deposits for this. So, and the thing is, they have to build. They have to buy. They're a publicly traded company. They have to have stock price go up. The only way stock price goes up is if you continue to buy land and build. So that's why we like working with them, because they don't have a plan B. They have to increase every single year. They don't have a choice. So that's the biggest risk right there. And then the other is, and another way we kind of mitigate that is we'll land bank it as well. If it's a really good deal and we do have a buyer back out, we might go to investors and say, hey, look, we need a little bit more capital to buy this thing. And a lot of times we're buying the land with 100% investor equity. So we don't have any bank notes on the property. There's no debt. We can hold it with them indefinitely until either A, the market bounces back, or B, we get another really good offer. We like the land banking strategy when it's an island in a sea of development. So all this development's happening around it. We're waiting for the development to complete. We buy that piece of land after it's approved, hold it for a year or two, and we get an additional bump in the forced depreciation because everything around it's finished.
Yeah, that makes sense. Okay, cool. So it sounds like there's a lot, obviously you've done in this space, and what kind of financing terms do you guys usually get for this? Is this all cash? Are you guys putting 20, 30% down? Does it depend on the experience of the operator? I'm just curious kind of how it works on that side.
Yeah. So for the land entitlement, we mostly work with just private investors. That's it. It's 100% equity partners. We do the entitlements. It's not a long-term hold here. We've got our builder lined up to buy it once it's complete. So that's 100% investor equity. When you get to the development portion, now is when we would introduce the debt. So if we were going to develop this site for, let's say, D.R. Horton, now because we own the land outright with investors, we've got enough equity there to be able to submit for financing. So typically you're not going to get better mechanics than like 65% loan to cost on a project. So not many people are doing LTV these days just because the market's really wonky. It's like they usually want to make sure that you've got some skin in the game. So these types of loans are more focused on loan to cost, not necessarily loan to value. They're still going to get an appraisal on it, and they're probably not going to go over 65% loan to value. But that's what we're seeing on the debt side of things, from local banks. Now, you can go up to a 80% loan to cost or loan to value loan, but you're going to pay a lot more money. You're not going to be able to get it from banks. That's going to be a private, like, hard money source. You're probably going to pay 15% for something like that. It's very, very expensive. Now, one of the things that I love about this space is sometimes I don't even have to go and raise any capital. That's because the builder will give up to 20% of the purchase price as a deposit released to us to actually do the development. So, we've got a builder right now that's releasing $800,000 deposit. It's free money to be used towards the development. I don't pay any money on it. There's no interest. That is a huge amount of the equity that's needed to do the project. So in many cases, we're under 50% loan to value for a lot of our debt loans. Why is that important? Because as an investor, I always tell people, you want to know how far the value of the asset needs to fall in order for your investment to break even. Because if you're an equity investor, you're behind the bank's note, right? You're getting paid second after the bank gets paid out. And so when you are doing these types and you've got that significant skin in the game from your builder, large seven-figure deposits that are used towards the development, combined with these very low loan-to-value projects, it makes the investors feel very safe.
Right, and that's a big deal. Yeah, if people get over leveraged and then they have issues, and so I guess it depends. The duration of this kind of depends how long it takes. But is this like typically like a 12-month thing? And I mean, obviously the markets you're working in, is it 2 years? Like, what's generally the time frame to get something purchased, entitled, built out with and sold off? Do you take a couple years?
Yeah, so the entitlement portion, that's going to take 15 months or less in Tennessee. Now, I tell people, God bless people in New York and California, because it's a different ball game over there, right? There's a reason why we're in Tennessee. I was talking with some California developers and complaining, and they're like, yeah, it takes us 3-4 years here. I was like, oh, that's crazy. I guess I should probably not complain. So that takes about 15 months, and then to actually turn the dirt and put everything, like we just finished 74 lots for a national home builder, and it took us just shy of a year to be able to do that. So depending on how big your project is, if it's 300 units, that's probably a three-year project depending on the absorption rates.
Yeah, gotcha. Okay, cool. So I imagine there was a time that this was difficult to do. Like you said, the last couple of years, it's changed a little bit. Has it been challenging? Obviously, when rates were rising, it probably got more challenging to do this, or has it gotten better now? Or what's kind of been the timeline of this over the last several years?
Yeah, it's becoming more and more on everybody's radar. I've seen so many people moving from the distress in the multifamily world and what happened with all the bridge debt that came due and caused all the personal bankruptcies that everybody's still licking their wounds from. It's become more popular. And the reason I think is, one, capital always needs a home, right? It got difficult because builders started scaling back in 2022 to 2023. In other words, the market doesn't like uncertainty. And so while they still have to build, it doesn't mean that they might expand. They might just keep the number of units the same, right? So they weren't as aggressive on new acquisitions. And so everybody kind of from the fall of 2022 to really the summer of 2023, nobody did anything. The market just completely froze. But what happened was, when rates went up, you still need product, right? You still need housing. And so there was demand for it, and you kind of hit these pockets where they still needed to buy. Like I said, it's Wall Street. They have only one strategy, and that is to build more. And so they started to buy again after a year, but they were more hesitant to expand into new areas. They weren't as aggressive on it, but they were still buying. Now, recently, it's created a really big opportunity because what they did earlier this year is there was everybody started doing the same thing, which was, hey, we don't want to self-develop. We want to have developers develop the land and sell us a lot. So you saw a lot of national home builders start scaling out a lot of the land that they had on their books, and they're flipping it to developers to develop and sell the lots back to them. The reason they do that is it helps their IRR and it keeps their balance sheet clean and low.
Yeah, got that.
But that's the big moves that we've seen. It's created a huge opportunity. If you have the capital and expertise to deliver lots for them, those will sell like hotcakes. Everybody wants finished, ready to go lots right now.
Yeah, it's interesting about land development. I have a friend who is 86 years old. This guy is super high net worth, and he has, we're talking 500 million, just really high net worth. He said in his lifetime, there's been 3 times where they've just been giving land away. And he mentioned this time, I think it was back in the early 90s, where near San Antonio, he got like 2,000 acres for like $10 million. And they sold it off over the next 5 to 10 years. And they made, I don't know, it was like a 20X or 50X. They just kind of basically, it was like a 20X, I think. They just kind of kept selling, entitling, and they just kind of kept selling it off. And splitting it, selling it off, and then they just they made a ton of money on it. It wasn't a ton. They had somebody kind of doing the entitlements, but when you're entitling and you're doing, I don't even think they build the infrastructure. They didn't even really do the development side of it as you're talking about it. They just simply split it off and sold it. And it's kind of interesting when that happens because land is people typically have to have quite a bit of cash around. So in times like 2008 or whatever, people don't have cash, right? There's times there's just less cash out there. But in some ways, it can be very, very lucrative. So obviously, so it sounds like this is something that people are starting to really see now and see that it's an opportunity if you have cash to be able to do that or to be able to kind of be a part of something like this.
Yeah, that's what we're noticing. A lot more people are getting into it. It's not as saturated as some of the other fields that are out there. That's what we've noticed. Again, we came in from building houses into this space because it was the natural progression, and you just don't see as many people out there that are teaching it. That was one of the reasons why we started the mastermind program, the Land Development Accelerator, is because nobody was out there teaching it. And we're like, man, there's a huge need for this. We wish that we had some community that we could lean on to learn this stuff and help us navigate it. I've got all the scars from all the mistakes that I've made over the years, and it's just what I love about it. You can do any type of real estate. It doesn't have to be single family residential homes. You can do multifamily, commercial, storage units. Everything starts with the land, and I just have not come across many other niches in real estate where you can have 3 exit strategies, entitlement and sell the paper, develop and sell the lots, or actually, build whatever, construct whatever, building you're wanting to do. So there's definitely some advantages to it that you don't see in other real estate niches.
Yeah, we're getting ready to do a land acquisition kind of development fund out of Kansas City, where there's going to be quite a bit of, there's kind of some options, right? You said that we can basically just get the land, we can entitle it, we can build some of it, we can sell some of it. Like there's a lot of things you can do, and of course there's a big need for warehouse, industrial type stuff in that area specifically. But it's amazing about real estate, right? There's so many different things you can do, so many different ways to get involved with it, which is really great. I wanted to ask you, I really appreciate this thought on the real estate and the conversation. I think anybody listening, just super valuable takeaways when it comes to land development. I think it's just great to have diversity in your portfolio, have different types of things in your portfolio. So I think you should definitely reach out to Brandon. Talk to us about biohacking. It sounds like you're also a biohacker. I do some biohacking. I take like a bunch of supplements each day. I finished yesterday. I just did a race called High Rocks, which is it's like a Spartan race, but you do it inside and you move heavy things. And woke up this morning. I was like, oh my gosh, my body's hurting today, but I'm sure I'll appreciate it later. But so tell me about biohacking. What are things that you're interested in that space?
High Rocks, that's pretty cool. I'll have to check that out. It's something I've been passionate about for a long time, right? Because wealth is one thing, but being able to enjoy your life to the fullest, that's the whole reason we build wealth, right? That's why everybody's listening to this. And I have a friend who's in his 40s who's had a major health complication, and when you have something like that happen, you don't have any other problems when you have health problems. So I take my health very, very seriously. So I do a lot of stuff, and it's been a journey. But some of my favorite things that I'll kind of share with the audience that have changed my life, like I'm used to eating the same things every single day. So when I introduce something new, I can tell whether it has an effect on me. Years ago, one of the best things that I did for my diet and my health is I introduced green smoothies. This is organic vegetables of some point. So I, don't get too caught in the weeds of like what my ingredients are, but I do kale, I do carrots, I do a protein powder, I do some fruits that go in there, and then I do some collagen peptides. So that's like my green smoothie. That just helps my digestive system. It helps clean me out. I get my vegetables in per day, my fruits and stuff like that. That alone has changed everything. The other thing that I bought that changed my life is my cold plunge. So that had some effects that I did not see coming. I suffered from brain fog sometime, and I don't know what was causing the brain fog. What it was. Some days I'd wake up groggy. When you jump into a vat of 50-degree freezing cold water, everything disappears. You're awake. You do not need a cup of coffee in the morning. Yeah. You are alive. Every cell in your body is alive, and my brain was firing immediately on all cylinders. So that was one of the biggest life-changing things, and I could just tell that my recoveries in the gym and everything else were so much better because of what was happening, that cold exposure. So those are a couple I can pause there.
Talk about cold plunging for a minute, because I'm a huge cold plunger. I started doing this a few years ago. I have one at my house, and I keep it at 40 degrees. I usually do 2 to 5 minutes, a few days a week. And it's like you sleep better, the inflammation, especially as you get older, it just really helps you with recovery. And they actually used it. It's interesting. People that, this sounds kind of crazy, but I've heard stories of people who have been on hard drugs like cocaine or something, and they use the cold plunge to overcome the addiction, because it does something with your adrenaline. It kind of resets you, right? And it's just, there's something about it that a lot of people think it's a little bit woo or just are totally resistant to it. It's like, I don't like cold. But they say the people that get cold more easily should do it, because their body would be better off, right? We're meant to live at 70 degrees Fahrenheit all the time. And so, but no, I love the benefits of it. And I'll do a full plunge, and I'll do a half, I'll just kind of do lower body. And it's just, today I'm definitely gonna do a cold plunge because I'm so sore from I might do a sauna and then a cold plunge. But definitely it's great to be able to do it. So I think that's great. And so you mentioned the supplements, the collagen, all that stuff. Have you gotten into the, I guess there's a rabbit hole, right? There's the Don't Die, the Brian, John, whatever his name is. There's that guy had 100 sleep score for 8 months in a row, which just sounds crazy, but just every single little thing you can dial in. But
I love all of his stuff. He is a wacko, but I love some of the stuff that he's going to the extreme. But for example, I read the book Why We Sleep, and I follow all of Brian Johnson stuff. That book, Why We Sleep, was one of the best books, because working out used to be my number one. Working out was it. Then I changed my diet to being number one, and now it's sleep, because sleep is the foundation of a healthy life. Your workouts are better. your mood is better. If somebody came out today, if a pharmaceutical company says, we have a drug that you can take, it's a pill, you take it in the morning at water, and all of a sudden you're in a better mood all day, you have more energy, there's less stress, you can think 30% more clearly, that would be the fastest, highest selling drug on the market, and there's no side effects of it, and it makes you healthy. Everybody would be taking it. And the thing is it's completely free. Everyone can do it. It's called sleep. And so I've got my Whoop. I measure my sleep and I track things, and I've got an alarm, to try to go to bed at the same time every single night. But I realized that time in bed doesn't equate to sleep, and that's why I got the Whoop. For me, there's a difference between I'm going to bed at 10 and I'm waking up at 6. Oh, I must have gotten 8 hours of sleep. Well, I realized that I need an extra hour in bed if I'm going to get the actual amount of sleep that I want. So I was thinking 8 hours in bed, 8 hours of sleep. No, I need to be able to get 9 hours in bed. So going to bed at 9, waking up at 6 to get the 8 hours of sleep that I needed. But when I started consistently going to bed at the same time, that was the key for me. Not an alarm to wake up in the morning, an alarm to go to sleep at night. And then completely blacking out the entire room. I can hardly see my hand in front of my face. Like that helps my sleep as well. And then for those that use alarms, one of the worst ways to wake up is a startled alarm. You immediately start your day in stress. So the Whoop has I forget the word, maybe pneumatic alarm, whatever. It's a vibration. So there's no noise associated with it. It's a very easy way to wake up. Best way to start your day is with an easy wake up in the morning, not something that startles and freaks you out. So there's a couple little things that I enjoy talking about.
Oh, that's amazing. I have a whole morning routine. It's just amazing. You can kind of dial in every part of your life and just how you go through life and what you're doing. But I think, how you go to bed, how you get up, your routines, those things are super important. So
are you doing the blood tests for performance, like the Life Force stuff with?
I have done that. I have done some of that. Actually, what I started doing, this is kind of a little outside the box. I basically take my blood work and I, take my name off and put it in ChatGPT, and I say these are my goals. I want to increase testosterone. I want to, if I want to lower one level or something else, I'll basically say I want to change this. And it will give me take these supplements or lower on this one or whatever. And I know a guy that actually, and it's helped me a lot. Literally, I had a time where if you're an athlete, you're an endurance athlete, 25% of endurance athletes have a lower testosterone. Mine was fine, but it was kind of on the lower end of normal. Mm-hmm. But I basically did this and I started a little heavier lifting, and it basically doubled within a couple months. It was crazy. It was just insane. I have a friend who is he's paying $6,000 a year to a nutrition consultant to help him. And he basically just started using ChatGPT, and it was getting as good or better results. So it's so funny how, we feel like a lot of stuff we needed to, pay for, but it's all at our fingertips. So.
That's where it's headed, man. That's cool. So you're uploading the blood results to it and then asking it, hey, what do I need to do? So this is similar stuff, because what a lot of people don't realize is those percentages that are on the back of foods and supplements, the 100% vitamin B for the day, whatever, that's to prevent disease. Yeah. It is not designed to help you optimally perform. There's a difference in that. And I want to optimally perform mentally and physically in everything that I do. And so that's the difference. And that's why you would want to do this. Because a lot of people get that confused. I just need to get, 100% vitamin B or whatever in a day and all this. I'm good right now. If you want to perform, this is something that you need to do. You got to get your blood checked and tested.
Yeah, no, it's really helpful. It's helpful to be able to work on. Well, Brandon, I really appreciate you, man. I appreciate you you being on the show, and I'm going to be on your show coming up here soon, which I'm looking forward to. I love the idea of land development because it's you actually are creating so much value for communities and for individuals and for builders. It's all just creating, right? It's creating for people, and it really does it in a way that's different than a lot of people seem very intimidated by it. But you have a way for passive investors also to join that as well. So and also with your mastermind, people can learn it and kind of do this themselves. So what's a way people can reach out and connect and learn about what you're doing?
Yeah, so we serve two people. There's the investors that if they want to invest, we've got them, and then if you actually want to learn to do what we do and learn how to do land development, we serve that crowd as well. If you're somebody that wants to learn how to do it and doesn't like the idea of making the mistakes and figuring it out on your own, if you want a clear path, without all the mistakes, go to learnlanddevelopment.com. There's a free course underneath the video. If you want to learn about the mastermind, there's a video for that. That's great. You can watch the video. But we have a free course underneath it called Land Development 101. It's designed to help you get started. I've got interviews there with council people. I've got interviews with national land developers, national builders. You can hear it from their side. And there's over 6 hours of content on, how to get started in land development and how to raise the capital for your deals. So you can go there and grab it. If you're an investor and, you're trying to build a legacy, make an impact, and create financial independence, and you like the idea of adding something like this to your portfolio potentially, you can go to hbgcapital.net/waitlist. So hbgcapital.net is the website, and you can do /waitlist if you want to watch the video. On hbgcapital.net, there's a free ebook that we give away called 100 Questions Business Owners Ask Before Investing. And you can grab that free ebook. The reason we gave that away is a lot of people, we realize when they're getting into the space, they're new and they don't know what questions to ask to make sure that it's a good sponsor or a good opportunity, and that book will help you out. So you can grab it.
Awesome. Well, hey, I appreciate you, Brandon. Thanks again for being here. And just to our audience, I hope you are taking time to really learn these new assets that we're talking about, right? I really am a big one on land development. Like I said, we're doing some of this. We're also starting to develop homes in where the fires were here in Altadena. But if you're paying attention to what's happening, there's always going to be new opportunities that come out. And so I just hope that you're continuing to learn and grow. And, there are times where being a multifamily investor makes a lot of sense. There's times where it's challenging, or there's a time where certain assets will make sense. And so it's that whole Warren Buffett, be fearful when others are greedy, be greedy when others are fearful. And so if you're able to kind of look at things independently, find out what's out of favor and move toward that, you actually do very well over time, as long as you can manage the risks and you kind of see what is happening in that asset. So appreciate you being here. Thanks for joining the Mailbox Money Show. We'll look forward to seeing you guys on the next episode. You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.